Concept of stock. Stock is the share of the ownership of the company. There are two types of stock, the common and the preferred. When we say common, it focuses on potential growth and comfortable risk for the investor. And when we say preferred, it is prioritize income and stability.
Definition of terms in relation of stock. So first is dividend. It is a share in the company profit. Ibig sabihin, ito yung kita mo depende doon sa kita ng company. Second is dividend per share. It is a ratio of the dividends to the number of shares. Ibig sabihin, ng ratio, ito yung fraction between the dividends at shares. Kumbaga, i-divide mo lang yung number of shares. So next is a stock market, a place where stock can be bought or sold. So the stock market of the Philippines is governed by the Philippines Stock Exchange or the PSE. Halimbawa sa palengke. Dito pwede ka bumili at magbenta ng stock. So this is the stock market. Next is the market value. The current price of stock at which it can be sold. So yung market value, ito yung presyo ng stock na kung saan pwede mong bilhin doon sa company. So that's the current price of stock. So next is the stock yield ratio. Ratio of the annual dividend uh, per share in the company market value per share, also called the current stock yield. So ang relation ni stock yield ratio sa stock ay dito, di-divide mo lang ulit yung dividend per share at market value. And last is the par value. The per share amount is stated on the company certificate. Unlike sa market value, it is determined by the company. It remains stable over time. It is said to be like market value, but the only difference in the company value is assigned by the company itself because it depends on the company's how much their stock price is. So sabi dito, it is determined by the company and remains stable over time kasi depende sa company. Parang sa market value, ito yung presyo ng stock ng company ngayon. So again, market value, it is the current price of stock at which it can be sold. And par value, ito yung presyo ng stock dividends sa company.
So I am Mariel Sophia Fortuna. So for getting the common stock or share, we are going to use the common stock formula, which is number of outstanding shares is equal to number of issued shares minus treasury stocks.
I'm Isabel de Lima and I will be discussing about the concept of bonds. So what is bonds? So it is a form of debt financing or raising money by borrowing from investors. Bonds are loans from you to a company or governments. And bonds are interest-bearing security which promises to pay amount of money on a certain maturity date as stated in the bond certificate. So bond issuers, those are the governments and company, while the bondholders are lenders to the institution, which may be government or private company. They essentially lend money to bond issuers by giving them capital.
So good day everyone. Good day mom. By the way, my name is Charlie J. Idlay and my assigned topic is about the definition of terms and its relation to bonds. The first one is bonds. Bonds is a debt instrument sought a promise to pay back with interest. And the second one is the coupon. Coupon is the bond's face or a par value. And the third one is coupon rate. It is the periodic rate of interest paid by bond issuers to its purchasers. And the third one is price of the bonds. Bonds price is the present discounted value of future cash stream generated by a bond. And the fifth one is a par value. Par value is the principal amount borrowed from the bondholder. And the sixth one is the term of the bond. The term of the bond is the amount of time between bond issuance and bond maturity. And the fifth one is a fair price bond. Bond valuation, in effect, is calculating the present value of a bond's expected future coupon payments.
Hello everyone, I'm Dimple Idong. I was assigned to explain to you the formula on how to get the interest on bonds. We use the formula I is equal to par value times rate times number of months over 12 months. We will use this formula to get the interest on bonds.
Hello everyone, my name is Demoso Angelica. This time, let's have an overall summary of the topic about stocks and bonds. So stocks and bonds are two of the most relevant financial instruments in the world. So stocks represent ownership in a company. So when you buy a stock, you are buying a piece of the company. So that means you stand to benefit from the company's success in the form of dividends. So again, dividends are the amount of the stockholder shares from the company's earnings or profit. So bonds, on the other hand, are a form of debt. So when you buy a bond, you are particularly lending money to the issuer, whether that's a company or government. So in return, the issuer promised to pay you interest over the life of the bond, and of course the capital. So stocks and bonds are related to each other because they are both types of investment. Understanding the risks and returns of these two types of investments can help us to make an informed investment decisions.